SoFi reported quarterly financial results this morning that sent the stock price up more than 6% on the day. Of course, the stock price was up much more than that before pulling back to a gain of over 6%. Still, the stock has performed really well this year, and I'm happy about that. I've had SoFi stock rated as a buy all year long here in 2025. I'm going to review the company's latest financial results. I'm going to share with you the details on why the stock price is soaring, and I'll update my recommendation on SoFi stock and let you know if I still think this is a buy or if now is the time to take profits in this company and look to something else.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, SoFi reporting that they accelerated adjusted net revenue growth to 44% year over year. And this is the primary reason the stock is soaring, is when you're accelerating revenue growth and you're a company that's already delivering profitability on the bottom line, that has a magnifying effect to the share price appreciation because you're not just growing revenue, it's not just empty calories, you're growing revenue profitably, and that means very positive things for the long-term success of your company. This is the highest level in over 2 years, and it was driven by record high new members as well as new products and an increase in fee-based revenue. Looking forward, the management team said they're focusing on innovating faster and to serve more of their members' needs and increasing their financial guidance for 2025. I've been talking a lot about how effective SoFi's business model truly is, especially against competition. I've talked about how legacy financial institutions, legacy banks, and I'm talking about the likes of Wells Fargo, Bank of America, Citibank, and JP Morgan Chase. These banks are at a disadvantage against SoFi right now because they're not harnessing the full power of their brick and mortar locations. And so those are just weighing on those companies' growth, right? If you're spending all of that capital on these brick and mortar locations and you're not harnessing the full power of those locations, then you're just setting yourself up for underperformance. And the reason why I say they've been not harnessing the full power of those brick and mortar locations is because they've not been staffing them effectively. They haven't been training the employees at these locations effectively. They haven't been hiring enough employees in these locations with enough skills to serve the customers that walk in. And so customers have slowly stopped going into banks and more quickly lately, right? Because when you do go into a bank, you find very few people there to help you. You're waiting in long lines, and some of the services you might need might be a little more complicated, not simple things like just making a deposit or making a withdrawal. And a lot of times you find that the person that you need is not there in person, anyways. You have to make a phone call to speak to somebody at headquarters or speak to somebody that's working remotely. And so, what's the point of having a brick and mortar location if you don't have the people there to service your customers, right? Mortgages are a famous example of this. Banks no longer have, at least the ones that I've visited and the ones that I'm accustomed to going to, they no longer have mortgage brokers at these places. So people going to the banks looking to speak to a home loan professional, they have to call in or find them online. And so that's what I mean by these banks not harnessing the full power of these locations. And I don't think they will because the cost is soaring and there's significant labor shortages. So they've also pulled back from that category as well. And SoFi doesn't have those brick and mortar locations weighing them down. They can invest more on tech innovation, on product innovation, on customer service, on offering a better yield on your savings accounts, on your checking accounts, all of which is what customers are looking for more than just having a location there where you can make deposits and withdrawals when all of that can be done on your mobile phone nowadays. You don't need a brick and mortar location to make a deposit or make a withdrawal. And so this is the primary reason I see as the tailwind for SoFi. And I see this as being longer lasting because those brick and mortar locations, those longer term strategies from the bigger rivals, it's going to be difficult to change. It's going to be difficult to say to their investors and their shareholders, look, we're going to invest more in these locations. We're going to hire more people. We're going to train people more. We're going to pay them more. Shareholders are not going to be happy to hear that from the likes of Bank of America and Wells Fargo and JP Morgan Chase, etc. So this is something that I see as a longer term tailwind for SoFi, and the benefits are coming in and increasing at an increasing rate. So overall, revenue increased by 43% to 855 million, and adjusted EBITDA increased by 81% to 249 million. The tailwinds I talked about in the beginning of this video is helping the company record new members at an accelerating rate. They added a record 850,000 new members in the quarter. That was up 34% from the same time last year. They now have 11.7 million members, 11.7 million members, or you could think of them as customers. Either way, these are folks that are attracted to SoFi because of the products and services that are offered, and they provide customers a better value proposition than many of these brick and mortar banks. And so if you think about changing banks, it's a annoying process. It's a time consuming process. More and more people are switching over to SoFi, and you can take that as an indication that its customer value proposition is so much better than legacy providers. Because if it wasn't, people wouldn't spend all that time to switch their banks, right? For me, if I was to try and switch my bank, I think it would take a whole Saturday for me or a whole Sunday where I spend hours and hours making all the changes in the paperwork, all the automatic payments at certain institutions and the uh, direct deposit at the certain institutions. All of those things that I would have to do to switch over completely to a new bank would take hours and hours. And so you wouldn't be doing that, and I wouldn't be doing that unless we saw a major reason to do so. And so when you see SoFi attracting this many new members, it's a great sign. It's a clear sign that the customer value proposition is significantly better than rivals, right? At least one step better, at least a full step ahead of rivals. And that's how it's attracting so many new members. And if you read my book, which I know thousands of you have, you know that the customer value proposition is one of the most important things I look at when I'm evaluating a company for investment. And SoFi scores an A plus in this regard. So after increasing by over 6% today, SoFi is trading at $22.40 per share. I calculated an intrinsic value for this stock at $19 per share. I like to apply a margin of safety when I'm considering investments, and this is well within my margin of safety. And so I would say SoFi stock is fairly valued at current market prices. Furthermore, over the next few days and weeks, I'm likely to adjust my cash flow expectations for this company upward, given the accelerating revenue growth. The numbers just came out this morning, so I haven't had time to digest the full impacts of the accelerating revenue growth and the better membership acquisition and the increase in the full year guidance. That's likely to have an upward impact on my forecast for free cash flow, not just this year, but for the upcoming years as well, as it shows me that the customer value proposition is better than what I was thinking coming into 2025. So, to answer the question, do I still think SoFi stock is a buy at these valuations? I think the answer is yes. For me, the answer is yes. I've had SoFi stock rated as a buy all year long. I last updated that recommendation on July 3rd, and I'll update that recommendation today and let everyone know that I still like this business longer term. Even at the new higher valuation, I still think this stock is a buy for long-term investors. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.